Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings. Today, we're diving into a report from Boxlight Corporation, and let me tell you, it's a bit of a roller coaster. It's like they're trying to assemble an IKEA bookshelf with only a spoon and a dream. Let's see what's really going on. So, Boxlight Corporation filed this report, a Form 8K, with the Securities and Exchange Commission. This is basically a snapshot of important events that happened recently. The key date here is February 19, 2025. This document tells us about something new they are doing. The big news is that Boxlight entered into an agreement to sell some of its stock and warrants, which are basically options to buy stock later, to some investors. Think of it as Boxlight raising money to keep the lights on and maybe invest in some new projects. They're doing this through what's called a private placement, meaning they're not offering these stocks to the general public, just to specific approved investors. They're selling 260,000 shares of their Class A common stock, which is the regular kind of stock that most people can buy. They're also selling something called pre-funded warrants that allow the investors to buy up to 1,063,000 more shares. And as an incentive, the investors get warrants to buy up to 1,323,000 more shares on top of that. It's a bit like a buy one get one half off, but for company ownership. The price for each share and a warrant to buy more shares was $2.13. For the pre-funded warrants and a warrant, the price was just a tiny bit less, $2.1299. All of this happened on February 21, 2025, when the deal closed. Boxlight raised about $2.8 million before paying fees to the people who helped them sell the stock and other expenses. They plan to use this money for working capital, which is basically the money they need to run the day-to-day operations of the company and for other general business needs. The pre-funded warrants are super cheap to use, only $0.01 per share, and you can use them right away. The other warrants, the common warrants, have a price of $2.13 per share, and you have to wait 6 months before you can use them. Both types of warrants expire after a while, so you can't wait forever to use them to buy stock. The agreement they signed, the purchase agreement, has the usual promises and guarantees that Boxlight makes to the investors. It also says what happens if Boxlight messes up and needs to compensate the investors. It's important to remember that these promises are only for the investors in this deal, not for the general public. Boxlight has promised not to issue any more stock or similar securities for 90 days after this deal closed. They also can't file any new paperwork with the SEC to register more stock, except for what they need to do for this deal. Basically, they're promising not to flood the market with more stock right away. For 45 days after this deal becomes official, Boxlight also agreed not to get into any tricky deals where the price of the stock changes based on some formula. There is one exception. They can still sell stock at the market, which means selling it at the current price, as long as it's above $2.40 per share, and they use a specific agent to do it. There's a rule about how much of the company these investors can own. They can't use their warrants to buy so much stock that they end up owning more than 4.99% of the company. However, they can ask Boxlight to increase that limit to 9.99%. This is to protect the company from being taken over too easily. Boxlight has to file paperwork with the SEC to register the stock and warrant shares within 45 days. They also need to get the SEC to approve that paperwork within 60 days or 90 days if the SEC decides to take a closer look. This makes the shares easier to trade later. Boxlight hired a company called AGP Alliance Global Partners to help them with this stock sale. They're paying this company, the placement agent, 7% of the money they raised, plus covering some of their expenses and legal fees. The people in charge of Boxlight, the directors and executive officers, have agreed not to sell any of their own stock for 90 days after this deal. They also can't ask the company to register any of their stock during that time. This is to show confidence in the company and prevent the stock price from dropping because the insiders are selling. This stock sale is allowed because it's not a public offering, meaning it's only for specific investors. The investors have promised they're not buying the stock to sell it quickly to others. Now let's talk about something else. Boxlight changed some of the rules for some of their preferred stock, specifically Series B and Series C preferred stock is a special kind of stock that has some advantages over regular stock. The changes say that these preferred stocks can't be turned into regular Class A common stock until one of two things happens. Either Boxlight increases the number of shares they're allowed to issue to at least 25 million, or it gets to be August 19, 2025. Boxlight put out a press release announcing the pricing of this stock sale. Companies do this to make sure everyone has the same information at the same time. This information is being furnished, which means it's not officially part of the report, so you can't sue them over it unless they specifically say it's included in another filing. Now let's step back and look at what this all means. Boxlight is essentially trying to raise money to fund their operations. It looks like they needed the money rather quickly, as these private placements usually offer the company a lower valuation than the public markets. It seems like they are struggling with cash flow. They've made some promises to investors, like not issuing more stock for a while and registering the shares quickly, which they really need to keep. One potential risk is that if Boxlight can't get the SEC to approve the registration statement quickly, the investors might get upset. Another risk is that if the stock price goes down, the investors who bought the warrants might not want to use them, which means Boxlight won't get any more money from those warrants. Based on this report, it's hard to make a very accurate stock price prediction, but we can estimate a rough range. Given their current financial situation and the need for cash, a conservative estimate would place the stock between $1.80 and $2.20. If they manage their cash well and show some growth, it could go higher, but there are a lot of risks right now. Overall, my opinion leans slightly bearish, meaning I expect the stock price to go down a bit or stay about the same in the short term. While they are actively securing funds, the terms and conditions of the fundraising, along with the restrictions placed, indicate underlying concerns. Thanks for watching Corporate Decoder. If you found this breakdown helpful, please subscribe for more plain English explanations of corporate filings.